Hey there, it is John from Bellum. I hope this note finds you doing well. Boy, it's been a wild year. I'm hoping that you fall into that camp of people who have been able to enjoy the low rate on the mortgage that they have. They're in their house, happy, and life is just kind of on autopilot, that you're able to go out and still enjoy eating out and buying things, although frustrated at the increased cost, at least able to kind of get by. You know, I think when you start looking at these monthly digests, especially as it relates to your home value and any other financial statements that you wind up looking at for personal net worth, all of those have taken a bit of a beating this year. Now, real estate is going to lag a little. So Wall Street oftentimes trades with the anticipation of the future. So if they think there's going to be a slowdown, stocks react pretty quickly. And then housing just takes more time to kind of balance out. And the second half of this year so far, there's still been buyers. There have still been escalations and a little bit of crazy behavior on the right house, but we can't deny that prices have pulled back a little bit and that some of the listings are staying on the market longer. Now, the interesting thing is inventory is still abysmal. It's awful. And there's a chance that in our local market anyway, that the strong employment mixed with some raises coming in just a few months in the first quarter, mixed with cost coming down, and then hopefully a stock market that corrects a little and stops going lower, and a Fed that finally sees some disinflation starting to pull back their rapid rate increases, all of that might actually paint a story where values kind of plateau and not drop. So know that you're going to see a lot in the media here throughout the next few months of some areas around the country that are just going to be awful. Austin, Sacramento, Phoenix, you know, their prices are dropping substantially because they had a lot of iBuyers. They also had a very different work from home environment where people would live there but maybe have a job in California. Our local DC metro area, the work from home was basically, I'm going to move out of DC and I'm going to move into Montgomery County, right? So still work from home in the suburbs, have a yard and personal space, but they're still in commuting distance from the city, right? And we did not have any iBuyers. So just know you might see some of the values on the publication push a little lower. If you have any questions on those, please reach out. When you click that do an AVM, I usually get involved with your realtor and we kind of run a market analysis. So you have a really good real-time understanding of value. Those should kind of come down a little bit. Interest rates are still high. I think there still is a little buyer hesitation out there in the market. I don't see that calming for at least 3, 4, 5 months. All in all, we think a pretty lame market until the spring when people kind of wake up and get back to normal buying behaviors and the market's kind of settle down between now and then. If you have any questions, you can always reach out. I'd love to chat.